Hey, what's going on, everybody? We've got some big names reporting earnings this week, so we'll be taking a look at that. It's an important week for economic data with the FOMC minutes and some purchasing managers' indices, and also personal consumption expenditures, and that's the Fed's favorite inflation gauge, so we'll be looking at that. We had a really choppy week last week. Hopefully you didn't get chopped up too badly, so we'll be looking to see if it left behind any clues to what's coming up for this week. We'll look at last week's setups and see if we made any money or not. And we'll look at some new setups for this week. We're a little light this week, but I'm kind of liking the look of what's going on in WYNN and Netflix. So, by the way, we put a lot of effort into these videos, so go ahead and smash that like button for me. And if you're wondering who I am, my name is Kevin D. I've been trading for 25 years. I'm a full-time trader working through the second level of the Certified Market Technician program. And if you're wondering why I do this, I work at the investor community. I run it, and we do these videos every single weekend to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded let me get my face out of the way there. A really cool community of like-minded people, and they all get to members get to see these videos a day early and get to take part in our live streams that we do at least once a week, and live mentor sessions. So check out the link below in the description if you're interested. Let's move on to a quick disclaimer. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, let's do this. First thing we're going to look at, as always, is earnings. There wasn't really anything terribly important today. I'm recording this on Monday, by the way, and I noticed in an earlier slide it said it was February 13th. It's not. Today is February 20th. So earnings this week, coming up tomorrow morning, Tuesday morning before the open. A couple of really big names you can see here. Walmart, very important name, and also Home Depot. So these will be watched very closely. These can and probably will move the market in the morning. Moving down the list, if you're following copper, then you've got to be following tech. So you might be interested in that. And if you like beer, then maybe you want to watch Molson Coors. After the close on Tuesday, we have Coinbase. Some other second-tier names, but I think Coinbase is the big one that everybody will be watching. Now, before the open on Wednesday, here's a really big one, Baidu. And this will really set up for all of our Chinese stocks. Baidu and JD and Alibaba and all those names will move off of Baidu's earnings as well. After the close on Wednesday, we've got NVIDIA. Obviously a really important one. That will move markets. We also have Lucid, Unity Software, Teladoc. I'm not sure if anybody cares about Teladoc anymore, but wow, what a fallen angel there, right? On Thursday before the open, we have Alibaba, another obviously really important Chinese name. So that will be watched very closely. Moderna will be watched very closely, and for anybody who's into healthcare, pharma, and biotech, that's a big name to watch. Domino's Pizza, probably not as big as it used to be, but still pretty big name. And going down this list, we can see some other names that you might like, and there's Nikola. They're still around. After the close on Thursday, we have Square, aka Block. An important name. Carvana, there's been a lot going on with that company, so it'd be really interesting to see what happens here. If you're into anything going on in South America, you might want to be watching Mercado Libre. Sorry for my Spanish-speaking friends for my pronunciation on that, my accent. Also Beyond Meat. I think people still watch this. Friday before the open, nothing really terribly interesting there. So that's our earnings. You can see we've got some really big names. It's sort of like the second wave of earnings. We had all the big names, the big tech names, and then as we get closer to the end of earnings season, we get all these big sort of retail names and the Chinese names and everything. So interesting week for earnings. So coming up this week on our economic calendar. Happy President's Day to all of my American friends. I hope you've enjoyed this long weekend. And in Canada, we've been celebrating Family Day. Most Canadians have had the day off today to hopefully go spend some time with their families. But back to work tomorrow, right? Tomorrow morning we have some Purchasing Managers Indices, the Flash Services PMI and the Manufacturing PMI. These are pretty closely watched and can and do move markets. Another thing that really moves markets is on Wednesday, and that is the FOMC meeting minutes from the meeting a couple weeks ago. So this is not an FOMC meeting. This is the minutes of the meeting. We get to see what they were talking about. We get to see the things that they were discussing. Were they discussing how actively were they discussing whether it should be a 25 basis point rate hike or 50? And I think what will be really interesting to the market right now is, were there any clues that some of that hot data that we saw last week? Because remember, we saw some pretty hot inflation data, where it came in hotter than expected. Most of the data was still lower than the previous month, but hotter than expected. Were they seeing this coming? I think that's if the market's really going to hang on that. If they talk about how they were seeing that coming, or if we see some hot data, well then maybe we have to go back to 50 basis point rate hikes. These are things that the market probably wouldn't like. So this could be quite volatile if there's anything new there that we don't know. So that's coming on Wednesday in the afternoon. Also, starting on Wednesday is G20 meetings, and they go through the rest of the week. So there'll be, occasional little bits of news that could be market moving coming out of that. But that's going to be totally random. Somebody's going to step up to a mic and say something, and that could potentially move markets. On Thursday, we have a preliminary GDP report for Q4 for the last quarter. Now this is the first revision of the report. We had the advanced GDP of, I guess, a month ago. And now we have an update to that. So this shouldn't be, unless there's a big change, we shouldn't see much happen out of that. And as always on Thursday, we have unemployment claims. Friday's a big one before the open. We have the PCE price index, the Personal Consumption Expenditures price index, and this is the Fed's inflation measure. This is what they really like to use for inflation. So obviously that's important to the market. Okay, let's move on, and we're going to look at the markets. We're going to look at a bunch of charts. We're going to look at major indices. We're going to look at international markets. We'll look at some important commodities, all of the important sectors, the main sectors, and we'll look at our plays and setups. So let's move into that. I want to start to do just a little bit different because this was such a crazy choppy week. I just want to look at our intraday chart of this week and kind of go through day by day and just analyze what happened, because I think that'll help us kind of center us for what may be coming this week. Whether we're bullish or bearish, I think it's good to take a look at this and see how the market reacted to all this data, because there was a fair bit of data that was certainly not favorable to the bull case. So Monday we really didn't have any data, and Monday the market just basically trended up through most of the day. I think there was In here, I think this was some Fed speak. One of the Fed heads got on a mic and got a little hawkish and talked the market down a little bit. Okay, so the next day, the big stuff happened starting on Tuesday morning before the open, and you can see right here this big red candle here with the huge wicks. That's when the CPI report came out, and it came out hotter than expected. And the market, really chopped around on it. It was really surprising that the market went up at all on that. And there was some stuff within the report that actually wasn't so bad. But you can see in the pre-market, the market came down, and then basically as soon as we opened, we had a little bit of a sell-off, and then it just reversed, and it sprung up, went higher suddenly, and then it rolled right over and went down, and it was very volatile in the first half of the day here. But then look at this nice reversal pattern. Now this is a 15-minute chart, by the way, but you can see the nice reversal pattern here, that kind of capitulation and then reversal and then the buying thrust on the way back up. And they bought it up nicely, and they bought it up basically up into the close. So that was really good. Now coming into Wednesday. Wednesday was not as big a report. What was that? Oh yeah, retail sales. So that will have come out right here on that red candle. Retail sales came in pretty hot. And, that's great for the economy. It shows everybody's got money, they're spending their money. This is excellent. But when we're worried about inflation, we don't want to see a hot retail sales number. So, the market was kind of like not entirely sure what to do with it, sold off a little bit. But then again, you can see that, once we got through the opening volatility, we went up all through the day. This is great. Now we've had two hot reports and we've totally shaken it off. This is like, wow, this market is really resilient. So then we come into Thursday morning's PPI number, producer price index, and that came in very hot. In fact, I think core actually went up, but I think the non-core, the regular PPI, did go down month over month, but was still quite a bit hotter than expectations. All right, so sold off hard on that. And now it's looking, now when you're looking at this in here, thinking to yourself, okay, yeah, we've had two hot reports and recovered from those nicely, but are we going to be able to recover from this one? And, everybody who's selling in here is thinking, no way, not a chance. Well, what happened? Again, just like every other day this week, or, last week, after a little chop at the open, they just bought it up, and they bought it up all day until right here, the Fed Governor Bullard, who loves doing this to markets, he came on and he was super hawkish, and he was talking about how we're going to have to go back to 50 basis point rate hikes, and the market hated that. And this started at 3 o'clock, an hour before the close. And the markets just sold off into the close, and they sold off in the after hours. They sold off overnight. And then that brings us into Friday, and there wasn't really anything happening on Friday, more Fed speak and stuff like that. It was really nice to see Friday afternoon, though, them start buying this. A little surprising, actually. Because, after this on Thursday, everybody, was getting really bearish, and you can't blame them. Sentiment really kind of turned negative. So good to see a little move up here. All right, so there is the chop. And if you got chopped up, trading in this, I wouldn't be surprised. There were some really nice moves, though. There were some really good tradable moves and, some trending stuff that you could have got in on. But it was a tough week for trading. So let's move on to put all this in context now. Let's take a look at some weekly charts. So we'll take a look at the weekly chart of the spiders, the S&P 500 index. Okay, and you see that we had let's see, 1, 2, 3, 4, 5, 6. 6 up weeks. I guess actually that wasn't quite an up week. We'll call that a rest week. But I guess 5 out of 6 weeks up. Then we have a little pullback here. It's no big deal, and really it looks like a little bit of a bull flag. Nothing to be concerned about. Hanging above the 50-week, if we zoom in there, you can see that the green moving average there. Hanging above the 50-week moving average quite nicely, and barely down on the week. Indecisive, but almost an inside week here. There's nothing wrong with what's going on here at all. I find it hard to be bearish looking at this. But the bears can make a case here. So let's move on to the Qs, because they're looking better than the S&P 500, actually, I think. We did have an inside week on the Qs last week. We did actually close high. I think that was a green week. It's so hard to see. Yes, we did close higher, so slightly green on the week. And again, the Qs had 1, 2, 3, 4, 5 up weeks in a row. We're allowed to take a rest for a couple of weeks. This is what helps us build some strength for the next leg up. And it is definitely starting to draw a pennant here. It's early in this, but this is a bull flag. Hard to be bearish looking at that. We've broken through this downtrend. So the expectation is a move to higher, moving out to higher. IWM. Again, drawing a pennant. It had a kind of a bigger red day, but last week was an inside week. So this is all bullish in here on these charts. Now, as we get into the daily, we kind of like, it's maybe not as ideal. We'll might as well we'll go backwards through here. Let's start with the IWM here. We did have this bull flag. We broke out the bottom of it, but notice that the 21-day moving average caught it and has held it up ever since. And look there's a bunch of green candles in here. All of these candles opened and closed higher. 1, 2, 3, 4, 5, 6 days in a row. IWM opened and closed higher. Again, hard to be bearish on this, but we've got to get up and move away from this area, because we're just in this area of chop that we have been in now for coming close to 3 weeks. All right, let's go up to the Qs. We certainly saw some weakness in there on Friday with this gap down. In fact, I should draw that gap in there. Hopefully this gap closes. I have to zoom in on that candle too. There's a little tiny doji in there somewhere. It's really hard to see. It's right on that trend line. On the support resistance line. So that actually will need to come down to there. Good. Okay. So you can see after gapping down on Friday, we came down, we tagged that 21-day exponential moving average, and then we went back up again. We closed right on this really important support line. There's the doji right up there. I got that wrong. It was hiding on a different line. There's our gap, like that. Okay, so yes, I thought that candle was actually more bullish than I thought. So we opened and closed right here. Came down, went back up again. So this is bullish. This is, got the makings of a reversal candle right there. Of course, we need to see follow through tomorrow. And finally, let's look at the SPY on a daily. And same idea. You can see nice hammer candle there. Look at the volume on this hammer, right? That's what we want to see with a hammer candle. We want to see good volume, above average volume, and we have it here. So, the SPY has been drawing a bull flag. It's getting a little long in the tooth here. So it would be really nice to see this get up and away and break out of here. We've had enough consolidation now, in my opinion. This is the week we really need to move and get above this pivot high. In fact, let's show that. So that's my... this may be asking a little much to get up and through 410 this week, but I think it can be done. I mean, we're only at, well, really, sorry, is that 410? Oh, that's 418, yeah. What are we at here? We're at, 407. We should be able to get up to 418. even if we went up here and consolidated for a day or two and then went through that next week, I'd be fine with that. Of course, on the downside, we've got this trend line down here. I think that would act to support on a break below. We've also got the 50% retracement of the latest leg up. So, we've got some support levels below. I really don't think there's any reason to be super bearish here. I don't get it. There is a fair bit of bearish sentiment out there, and I don't really get it. I'm not super bullish right now either. I mean, everything is just choppy and sideways. So I'd like to see this make a move one way or the other. All right, let's move on to the volatility index. You can see that, still chopping around in its range. It's up near the top of the range right now. So we'd like to see that roll over. Do not want to see this break out above 22 here. The 10-year yield. This has got a nice little short-term uptrend going, but on Friday you can see we stalled out at this pivot going back to the end of December, stalled out there and pulled back. So that has the beginnings of a potential reversal right there on the 10-year yield, which would be good for equities. Let's take a look at our dollar index. Oops. There we go. Whoops. Okay, here's the dollar index. So, after being a nice downtrend, built a base, moved up, kind of built another base and broke out the top of that base, but really in this sort of cluster of resistance, between this uptrend line, this major support. I mean, it got through that major, or what had been major support, became major resistance. It's now above that, but still dealing with this trend line. We'd really like to see this roll over. If this, rolled over, it would be good for equities. Let's take a look at our DCA timing tool really quick. Here's the SPY. No changes here. There's everything is green still. Everything is well above the 20-week moving average and the 40-week moving average. All the MACDs look good. So all systems go on your dollar cost averaging. All right, back to our charts. We're going to look at the global indices. So this is ACWI, and you can see. So this is an index or an ETF that covers basically the entire world's equities. And you can see we have a nice little hammer candle in there from Friday after breaking down below the 21-day moving average for the first time in about a month and a half. So let's see that get right up through there, and good volume on Friday as well. So like I said, like to see a hammer with volume. So ACWX is the all-world index excluding the United States. And you can see that we have a nice little green, kind of a reversal kind of candle there. Not really a hammer, but still a nice looking candle and with good volume. EFA is Europe, developed Far East, and Australia. This has got a little bit of a downward channel going on here, but consolidating. Taking a little bit of a rest, but hanging in near highs. So, that's good. And I could easily see this turning up. If we look at emerging markets, ex-China, again, grinding down a little bit, trying to consolidate, maybe a reversal candle on Friday. And finally, we'll look at China. We're looking at FXI, which is the China large cap. You can see this gap is pretty much filled now. It left a little bit of a gap behind there. We'll maybe move this gap fill over to there. Yeah, something like that. Okay. So yeah, that gap down on Friday went a little lower, almost tagged that 200-day moving average, and then went back up again. So kind of a reversal. Still a red candle though, but be interesting to see how this fares on Monday. Actually, I can tell you how this is going to fare tomorrow when it opens, because Asian equities did really well because Asian equities were open, right? Asian equities did really well last night, and especially mainland China was quite strong. So we should probably expect to see, assuming their rally continues tonight, we should see this gap fill quite easily. All right, let's move on to some commodities here. We'll take a look at gold. So after gold's little temper tantrum and plunge here, you can see we've got some buying wicks going on, and we've got some nice reversal candles here, and a nice hammer, really nice hammer from Friday. Okay, this little doji right here is the current futures market candle as I record this on Monday, late Monday afternoon. So yeah, this looks like it's going to reverse here off the 382 retracement and this support area at around 1840. That looks to be going higher. GDX, the gold miners, and you can see very similar kind of action, right? Nice hammer candle here, pretty decent volume, and right off of the 200-day and 100-day moving averages too, and above the 50% retracement of that last rally. So yeah, this looks good for a reversal in these precious metals. We'll take a look at silver. And we can see the same sort of action here, right? Came down, and then you've got all these buying wicks and a nice hammer, nice follow-through candle that is developing right now as we speak. So yeah, I like what we're seeing here. And we can actually, if we look at copper, we can see that this turned early. Now, copper is not a precious metal, obviously. It's a base metal, industrial metal, but you can see that this turned a few days early, and maybe gave us a bit of a warning that we could see a turn in the precious metals as well. Good to see this support hold, the 50-day moving average hold, and this is good for equities as well. When copper is rising, equities are usually rising. Let's take a look at oil. So oil had a bad day on Friday. That's that red candle. But you know what? Had a worse day. I mean, oil is sort of rolling over a little bit. A little surprising to see it pull back that much from 80. And I think this was Biden announced releasing more from the SPR. I don't know what's up with that. I mean, why? Oil prices have bottomed out here. It's really time to be refilling that SPR. Thing's almost empty. And you're not going to know what's at the bottom of those tanks. They're probably full of sludge. You go to use that stuff and you're in trouble. But anyway, you can see that right now in the futures market, right now we are trying to move up a little bit. So yeah, bit of a nasty move down in oil, but I mean, oil's volatile like that, no big deal. However, if we look at XLE, the energy sector ETF, that really had a nasty move down. And if you look at any of the individual companies, especially the producers, companies like Exxon, Chevron, think of any of those big oil producers, they have some pretty ugly red candles, gap down and red candles from Friday. So this energy play might be telling us that it's done for now. There's a lot of money moving out of that. Now, will it find support? Will XLE find support down here where it has a number of times, even after some pretty ugly red candles? Well, that's what we would expect, right? This should be a pretty strong level. If it breaks down through there, though, I think it's a really quick move down to the next level, which is, in the 76 area. You do not want to be in this if it breaks and you get a close or two below this level. Let's go just back up a second, look at natural gas. That on Friday broke out of this nice base that it was building. I liked this consolidation here. It had been building a nice base. It had that breakdown on Friday, and this is the current candle now. It is down, currently trading down, but it's finding some support here, hopefully. I think there's a lot of dead air. Yeah, there's a fair bit of dead air down here. Gonna have to draw some new levels in, I think, maybe. If this support level fails, I'll have to, by next weekend, I'll draw some new levels in there for you guys. But I think this might hold. All right. I mentioned the oil producers. This is XOP. This is their ETF. And you can see what's going on, right? We have the gap down into a support level. Now it has cracked through that support level before. Will it break down again through here? I see that oil futures are up right now, but anything could happen overnight. Yeah, we really need to see these oil futures move up, and that will help this find support here. Even OIH, the oil services ETF, got whacked pretty hard. Now, this broke down. This has been building a base for a while now. I mean, we're going on 6 weeks here. Broke down out of there with the big red day, tagged the 50-day moving average and bounced a little bit. So again, it really needs to save itself here, or there's going to be a quick move down. So if you're in any of these energy plays, be really careful over the next couple of days, because the bottom could drop out of this. This is a crowded trade, and when everybody starts selling, it could move really quickly to the downside. The reverse is true as well, right? When money starts to flow back into this, it could flow in really quickly too. Taking a look at TAN, this is just chopping around, being messy as usual. However, it is, you can see we've got 3 lows now in the same spot, and sort of a almost hammer candle there from Friday. So, maybe it's going to be on its way back up, but not terribly interesting at the moment. XLY, consumer discretionary, chopping around, holding support above its moving averages. They are, showing support, and we have a hammer candle on Friday. XLI industrials, hanging out nicely up at highs, consolidating a bit. It'd be nice if this did take another leg higher. It's being supported by its 21-day moving average. This is all healthy. Nothing wrong here. No signs that this, they're going to start selling this or anything. I think we could see a move higher here very soon. Financials also looking pretty healthy. Pulled back a tiny bit in this range, so it's now at the bottom of its range, but the bottom of this range is major support, so we would expect to see a bounce up out of here. If it did break down, down from here, watch that 50-day moving average. You've seen on a number of charts how that 50-day moving average has held things up nicely. Technology. It had been building a nice base after a really nice move up. Unfortunately, on Friday, gapped down and broke down out of that base. But look, tagged the 21-day moving average and went back up, and it drew a hammer. And even a red hammer candle can be a bullish pattern. The color doesn't matter too much on those. The important thing is the long wick and that it reversed, right? And half decent volume, not great volume on that one though. XLC Communications. This rolled over earlier, after gapping up, rolled over. It's completely filled the gap now, and trying to find a bottom, I think, in this move down. Was kind of drawing a bit of a bear flag there, really. Friday's candle kind of broke down out of it, but it reversed. So I'm looking for this area here to support. And if it doesn't, though, that is definitely information. We could see some fairly quick downside there in this ETF and in some of the names. Speaking of which, let's take a look at Meta. So as you know, this was one of our call-outs here for taking this short on this breakdown. I took this, took some nice profit out of that. And you can see it came up, it retested, rolled over again, but it's finding support in around this 170 level above its 21-day moving average. So I think the buyers in this, unless the market is really kind of selling off, I think we're going to start seeing buyers coming into this. We may not get a complete fill of this gap. But if the market decides to sell off, early this week, then we will definitely see Meta sell off along with it. Apple. Just chopping sideways. You know, a little bit of a gap down on Friday, but you can see it had that same sort of reversal candle there. Amazon. This one's, you know, kind of weak. Again, though, had a hammer on Friday, but you know it's now below that 50% retracement of that move up, of that last leg up, and that's a bit of a scary place to be. But you can see we've got the 618 just below. We've also got the 50-day moving average down there. So there's, you know, a lot of potential support down here, but we'd really like to see this just move up and away out of here. Netflix. Well, actually, we'll look at Netflix a little later. There's kind of a setup there. Take a look at Google. Kind of messy, kind of weak looking. I wouldn't be surprised if this thing broke down. I hope that if it does break down, I really hope that it doesn't take the rest of the market with it. But this looks weak. You know, buyers have. Well, I mean, you know, they really gave it up here on their Bard AI thing. But I'm surprised they really didn't come in by now. As you can see, some buyers came in here and they got whacked. So they're going to be, you know, they're going to be taking their time next time. And that's why I think we could see more downside here. Okay, Microsoft. This had quite the pullback too. Lots of gaps. Look at, you know, if I drew all these in, the whole thing would be red here. You know, gap here. Let's see, where are we? Friday, Thursday. Yeah, gap down on Tuesday, Wednesday, Wednesday, Thursday, Friday, all gap down. Which is kind of weird. I don't know why Microsoft has become so gappy all of a sudden. Definitely a change of character in this. Now, is the 21-day moving average going to support it? Or will it come down and completely fill this gap, come down to the 200-day moving average down there in the bottom of the gap? Is that where it's going to support? You know, so you can see that some of these charts are suggesting that we've got another down day coming. You know, so is that another down day tomorrow? And then do we start to turn up in all these stocks and in the major indices? Tesla. It's been hanging in quite nicely. And it definitely bucked the trend on Friday and had itself a nice green day. It did gap down a tiny bit, but it almost instantly reversed right off of a minor support level and closed above, yeah, that did close above 200, right? Where's our close on that? Yeah, 208. Yeah, not bad. Not bad, Tesla. So, you know, this had a little pullback, had a really nice bounce up, had another minor pullback, and it looks to be bouncing up again. So, you know, this is potentially a higher low here, you know, as we really zoom in on this. So, looking pretty healthy. Semiconductors, not entirely healthy. They pulled back pretty hard here. But again, found some support at the 21-day moving average, but got to get up and go. You know, this hammer candle has to prove that it is bullish and get moving. Otherwise, I think we're coming down testing support at 230. XLRE Healthcare. Beautiful downward channel here. Very well behaved in the channel. It's working beautifully. You know, I mean, almost every time it gets down to the bottom of the channel, you get a nice big green candle. However, this big green candle came off of a touch and a breakthrough the 200-day moving average. So maybe this time is different. Maybe it's going to come up here and try and break through here, but I don't know. I'm unconvinced. XBI Biotech. You know, so this had a nice consolidation. Then there were a couple of really nasty days in here. But consolidating again, and right on top of the 50-day moving average, and Friday gave us a nice big green candle, broke out of its little consolidation, ran into some moving averages in the bottom of the former consolidation. So this looks good. This is nice and healthy, but it's really got to work its way into here. It's encountered some resistance and decided to stop there. REITs, nothing going on here. The defenses aren't, you know, terribly so exciting, of course. XLP, yeah, we had a big reversal candle on Friday. and it might be breaking out, of this this downward channel. Not surprising, with the market getting a little risk off mood through the week. It's not surprising to see that this was showing some strength, relative strength. And utilities, same idea there, right? Utilities have been showing a little bit of relative strength, which again isn't surprising when the market is in a risk-off mood. All right, let's take a look at some of our previous setups. This is HIMS. This thing is being so technically well behaved. You get these breakouts, you get a little bit of pullback to the breakout level, and then it moves up again, right? You get the move up, and then you get this nice big gap up. You go up there, you get a scary looking candle, and then the next day you go, nope, you have a nice big green candle. We move up for a few more days, kind of grind up, and then we roll over and we have, what was looking like a pretty ugly red candle for part of the day on Friday. It comes down, it tags the top of that gap perfectly to the penny and reverses and gives us a beautiful looking hammer candle. Now the volume is a little light on that hammer, but nonetheless, this is a nice reversal right off of a level where it should reverse. I like this stock. Really good TA lessons in this, especially with regards to sort of pullbacks and where pullbacks should find support and then reverse. This stock seems to be really good at that. Mustang Bio. This is that risky little biotech that we had been watching. We were watching this wedge form and thought that it might break out the top of that, but on Monday morning it decided to break out very weakly from the bottom of that. But it's kind of been trying to grind it back ever since, right? And even on Friday, when it broke out, sort of the bottom of this new little, very, very super short-term uptrend this is making here, it reversed and went back in there. So it's interesting. I'm not sure what to, what I'd really, if I'm going to be bullish on this thing, I want to see it come back in here. I want to see it consolidate under this level for a few days, nice and tight, and then I'll buy that breakout out of there. But right now, there's nothing to be done here. Maybe if you want to play short, if it breaks out the bottom of this again, maybe there is a quick move to the downside. But, this is a risky biotech, and I don't want to hold a short overnight in this thing. I would strongly recommend you do not hold shorts in this thing overnight. Anything could happen. I mean, this could easily skyrocket on some news. All right, so the other one we were looking at last week is NVEN. We talked about how this was forming, or starting to form, a nice tight little bull flag, and I wanted to see another day or two in there, and of course I didn't get it. I never get when I want a couple more days out of these bull flags, they just go and take off on me. So hopefully some of you got in there, because that was a pretty decent little move there. All right, moving on to new setups. So not a lot. Everything kind of looks indecisive and choppy, much like the markets look indecisive and choppy right now. So there aren't a lot of really good setups, but I think this WYNN is looking pretty decent. Now, let's just scroll back here to get some context, okay? So we've got this long-term downtrend sort of moving down. This downtrend goes back to 2018, by the way. So we've got this downtrend, and we are right now consolidating right underneath it. Look how tight this consolidation is. Right, you can barely see these candles, compared to a lot of the other stuff that we've seen going on. And, this has become less volatile, over the last many months. But compared to its past, this is super, super tight what's going on up in here. So let's zoom in on that and see. You can see on earnings, we had this gap up, and we're kind of coming down and very slowly filling that gap. But it's just so tight here. How can you not want to buy a breakout of this? Especially because of that long-term downtrend. If it gets up there and if it gets a close or two above that, it could really go. Not a lot of short interest. Around 5%. So I don't think it's going to scare a whole lot of shorts when it goes. But I think you can see bulls jumping in here and riding this. Now, what might be really interesting? Here's another potential way to look at this setup. Maybe it doesn't immediately go up and break out through here. Maybe it comes down and breaks out the bottom, hits the 21-day moving average and the bottom of this gap and instantly reverses. That could be a really, really good entry. I would be watching this. If we get a really ugly day in this, or ugly couple of days, it comes down into this area, set an alert for the bottom of this gap, somewhere in the 103.80 area. And if you see it start to reverse intraday off of there with volume and some momentum coming into it, I'd say that would be a pretty decent low-risk buy. Because on that capitulation reversal, you could just put the stop just a little bit below, risk maybe 40 cents in this thing or something. So that I think would actually be a pretty cool little setup if it did that. It may not, but it's definitely worth watching for and maybe setting an alert for as well. So obviously you want to set an alert up here for the breakout and set an alert down here in case it comes down here quickly and tags this and reverses. So that's WYNN. This is the best. This is probably the best setup for the week that I've been able to find, and it's got that two nice ways to play it. The other one I kind of like is Netflix. So as you know, Netflix has been pretty strong. It's been leading these FAANG stocks. Now this has been consolidating sideways for a while. You can see where it tried to break down out of there and it instantly reversed. And we've got the same sort of thing happening again. And look where we reversed on, I'll zoom in a little more here, reversed almost to the penny of that previous pivot, which was also this pivot high here. So not really a hammer here, but a decent looking reversal candle. And I think that we move back up into here. So if you are looking to, this could be good for investors too, right? If you're looking to add to a Netflix position, because you've been wanting to, I wouldn't add just because of this, but if you've been wanting to add to a Netflix position, this looks like a pretty decent entry to me. And if you're worried about it, you can always just stop out below. If you buy above here on a move above that candle, and then it just rolls over, you could always stop yourself out below and sort of wait for it to regroup, probably down in here. But I think this is fairly low risk for the investors, and I think it's fairly low risk for the traders as well. And you could certainly be playing this for move back up to the top of this consolidation. So what do you get out of that? You get, from about 350 up into 370. That's not a bad move. You get 20 bucks out of that. So that's about it for setups. There wasn't, like I said, not a lot that really excites me in setups this week. So let's take a look and see what we've got coming up for the members of the Discord the rest of this week. And remember, if you want to join us in the Discord and join in our live sessions and follow along, because we're following all these setups. We're following along quite closely every day through the week, plus a whole bunch more. Come join us in the Discord. The link is down below in the description. All right, so on Wednesday we have our ticker talk, where we'll quickly look at the market and then we'll go through the tickers that you guys are watching. And then next week, of course, next weekend, I'll be doing the briefing just like this one. So that is about it. I want to thank everybody for coming out. Hit that like button, share, and subscribe. And we will see you all again soon. Thanks, everybody.